Good morning, good afternoon, or good evening, everyone, depending on where you are in the world. Thank you for joining us today in the first event of these online conversations around digital asset custody. Every week, we will be hosting a fintech to discuss how the industry is evolving, trends and challenges experienced by technology providers, financial institutions, and other players. So I'm delighted to welcome our panelists for today. So let me start by introducing them. We have Alessio Quaglini, CEO of HexTrust. Alessio, would you like to tell us a little bit about HexTrust?
Sure. Well, HexTrust is a fintech company that focuses on custody of digital assets and building the financial markets infrastructure for safekeeping and transacting on digital assets. We're based in Hong Kong and we have offices in Singapore. In 2020, we plan to set up our offices in Europe. And we already have licenses in Hong Kong and applying for the licenses in the other jurisdictions.
Excellent. Thank you and welcome. We're also joined by Casper Johansen, who is a co-founder and managing partner of Spartan Advisory Group. Casper, would you like to tell us a little bit about Spartan?
Yeah, sure. Hey, everybody. Thank you for joining today. So the Spartan Group is based out of Singapore and Hong Kong. We have two main businesses. One is an advisory business, which is financial advisory services and a consultancy to blockchain and cryptocurrency companies. And we also have a fund that invests in cryptocurrencies and digital assets.
Great. Thank you, Casper, and welcome. And I'm also joined by my two esteemed colleagues, Peter DeMeo, who is our head of IBM HyperProtect Digital Assets Platform. Hi, Peter. And Andrea Corbelli, who is IBM Global Technical Lead and also my co-host for today. So, gents, welcome, and let's start. So Andrea, can you hear us or can you talk?
Yes, at the moment,
okay, excellent. You want to... Excellent.
Challenges.
So thank you, Fotini.
No, we lost your sound again. Yeah, so let me start with the first question to our panelists then, and then when you're able to join us, you can carry on. Okay, so gents, with the evolution of the custody industry, we see a lot of new entrants and the competition is getting a bit stronger, which pushes the business models into a certain direction. What is your sense? How do you see these business models evolve? Casper, would you like to give us your view on that one?
Sure. So obviously the space has been around for a number of years. I mean, Bitcoin has passed its 10th anniversary, but for a very long time, it was mainly just self-custody. And in the last, I'd say 3 years or so, especially after the advent of Ethereum and the ICO boom, we've seen more and more centralized custody providers, which is more akin to the traditional financial markets, where frankly most people don't really think about where they keep their shares or their bonds. They don't even know if you ask them. They just know it's safe and in segregated accounts. So you see more and more. So there's two factors. One is the overall digital assets market is growing. I'm talking about both kind of cryptocurrencies and public blockchain assets, but also increasingly securitized assets that are being put on blockchains. So the overall market is growing. And in addition to that, the players that are offering custody is also growing. So, I think of them in two ways. There's independent players like HexTrust, Alessio's company, which basically are, their DNA is pure play custody, and they of course offer additional things on top of that eventually, but really they are first and foremost digital asset custody companies. Then there's another type of custodian that's evolved out of another core business like Coinbase custody, which is first and foremost an exchange, but then in their core business they need to store digital assets, so they decide to take something that's their infrastructure and basically spin it out as a separate business and to monetize that. So, and they also sometimes do acquisitions, like we've seen Coinbase acquired their custody business a couple of years ago, and we've seen other businesses like Genesis recently announced the acquisition of Volt, which is a custody business. So we're seeing either these businesses growing independently or as bolt-on acquisitions to existing businesses or being spun out of those existing businesses. I think later in the session, we'll talk more about, what does that mean for consolidation in the business. But right now, that's what we're seeing. And we're still in this expansionary phase of increasing amount of players and increasing amount of competition. I think, Alessio lives and breathes this every day. So maybe you can talk a little bit more about what does that mean for his business and how does he see it evolving?
Sure. Well, yes, actually, I completely agree with can you guys hear me?
Yes.
Yes, okay. Well, I completely agree. Actually, yes, the market has certainly become more competitive over the past 2 years in terms of companies offering third-party custody services, but also in terms of a variety of other options that are offered to customers, like such as a SaaS solution for wallets or enterprise solutions to integrate with core banking systems. As a consequence, we've seen pricing that has been affected as well, and pricing models that have moved from something that we were seeing 2 years ago, 1 year ago, of 50 plus basis points to a few basis points in 2020, or in some cases even free services. However, I think if we want to understand this market, we really need to split the market into those players that are pure custodians and players that provide other services on top of custody, right? So in this last category, we have players that provide other services such as brokerage, exchanges, and into custody services at a later stage for institutional clients. Or at the same time, we have custodians that were pushed by compressing fees into offering to basically effectively subsidizing their custody services. And we've seen, as you mentioned, some important announcements even last week. In Xtrust, we really believe that the value of this new digital asset financial market is the fact that we can offer an open platform that allows our clients to decide whether they want who they want to trade with and which platforms they want to use to lend or invest their assets. It's a completely different model when you compare it to the one of Coinbase or other providers that maybe offer custody or free custody, but then they want you to trade on their platform and use their lending services. In the long term, I think that subsidizing a business model that loses money for shareholders is not sustainable. We really believe in the value creation that will happen through connecting capital and services and providing a transparent pricing model for a specific service.
Thank you. Thanks, Alessio. Peter?
In terms of the new entrants, for the different custodians and service providers that I speak to, it's very clear that, as we said earlier, that the consolidation is occurring, that we are seeing some of the more established and older custodians, teaming up to offer things like, prime brokerage, but also like, I think Kingdom Trust has recently started to offer IRAs in the U.S. for long-term retirement accounts and so forth, and then teaming up with exchanges to get liquidity and so forth. So, it does sort of play into the kind of other services provided, but, I think adaptability is kind of the watchword here in the market today for the custodians as well as, those that are building additional services on top of custody, because, at the end of the day, custody is the foundation for everything.
Good, thank you. So one of the key one of the key concerns or a key thing around digital asset custody is managing private keys and the whole security aspect of it. So there are multiple ways of managing the private keys. What is your philosophy in this regard? Peter,
I'll take it. Yeah, it's interesting. This year we're kind of, I think, on a record trajectory for losses with respect to cryptocurrency, just in the cryptocurrency space in terms of thefts, hacks, and fraud. I mean, there's that, let's see, what's it called? Wo token, which is a big Ponzi scheme out of China. And, the first 5 months of 2020, there's already been $1.4 billion lost. And, last year there was something like $4.5 billion, which was then up, 160% from the previous year. So for owners of cryptocurrencies and digital assets, the fraud risks are not limited just to external hacking and so forth. They also include external risks such as from employees or administrators or corrupt transaction approvers, and they exploit the gaps, if you will, within the internal security frameworks and controls that are in place or perhaps not in place to sort of misappropriate the cryptocurrency or the digital assets with respect to how they're being processed. And these risks are certainly most pronounced where the access to the private keys, if you will, that are associated with these assets are entrusted to one or a few individuals, right? So when it comes to then how do you address the risk of private key management, it turns out to be a fairly difficult problem, right? You have traditionally keys that have been maintained on exchanges in what we call hot wallets. Of course, with social engineering and so forth, there have been ways to kind of circumvent and get the key material there. On the other end of the spectrum, you have what they call cold storage, where the assets are kept completely offline. Then, you have issues with liquidity, and you're trying to do new business models such as like staking, passive revenue schemes and things of that nature, where you can't have the assets simply sitting offline and taking hours to do a transaction, right? And of course, there's some sort of happy middle that's perhaps warmish that's in between. Well, when you want to have high liquidity and high security, you have to think about then a really good, strong technology approach to managing your keys. And today, there are different approaches to that. There are software-based approaches and hardware-based approaches, and there are some pretty definitive schools of thought on both, right? You have folks on one side that say, okay, the key material can only be kept within the secure boundary of a hardware security module, hard stop. And then there are those that say, hey, you know what, we can run this in software, but we're going to go ahead and split that key up, and we're going to push those different parts into different places, and we're going to then distribute the risk, if you will, geographically, right? And then there are others that can basically provide, the benefit of both and be able to maintain the full key, but in a very, very safe manner. And I think that when we talk about the IBM Hypertech Digital Assets platform, we actually provide support for all of those different approaches. But we do feel, our personal bias is that, key material is best maintained and secured by hardware. Okay, so that's my perspective on it, and I'll just pass the mic over to, I guess, Alessio. Yeah, you probably have a good opinion.
Yeah, I mean, Peter, obviously, this is also the way we think about it, and obviously we have considered different ways around how to structure our platform, right? So you mentioned the possibility of splitting keys into different private key material. Even there are different options. So some people use a multi-sig approach. Some people use a Shamir secret sharing approach. And now lately the buzzword is the MPC approach. I would say that each of them has some advantages and disadvantages, right? So if you look at multi-sig, right, for example, it's a very secure approach, but it has a very different encryption for each blockchain protocol. Hence, it requires additional implementation efforts and is prone to error. In addition, some protocols don't even support multi-sig natively, so you have to rely on some third-party smart contracts, and we have seen several of those being hacked in the past. On the Shamir secret sharing, Obviously it's a very established and proved cryptographic algorithm since I think 40 years ago. You split a key into different parts, and you will need a certain quorum, m out of n, to be able to recompose the key. The issue that it has is that the key has to be recomposed in a certain place, and so there is a single point of failure on the machine where the key is reassembled. Yeah, so we've seen companies coming up with MPC approaches, which basically have the advantages of splitting the key, like in Shamir secret sharing, but at the same time, you don't need the key to be reassembled in a single machine, but you can use a mathematical algorithm on separate machines to basically provide a valid signature. Also, this approach obviously has disadvantages. So you can, in most of the implementations, you do not know actually who has signed the transaction, so you have an accountability problem. Most of the algorithms are proprietary implementations, so they have limited public review, and we know how important it is in cryptography to have a certain level of public and peer review. And then you have the problem that MPC approaches are not always actually they have very limited support from HSN provider. There's advantages in our approach, which is similar to what you described. We believe that all keys have to be managed in enterprise HSM, yeah, no matter what, whether you split them or not, and such as the one that is provided to us by IBM. And then you have to have a certain level of enterprise security, redundancy, and ability to provide auditability for the usage of these private keys. Also, you need to make sure that the usage of these private keys can be controlled with cryptographically enforced access controls and immutable policies. Lastly, in our implementation, we're also able to give clients the option to actually control the master key that enables the unwrapping of their private keys. And this is very important because it gives our clients the option to migrate their private keys to another custodian or to their own self-custody management if there is a need to do so.
Great, thank you both. Andrea, you back?
Yes.
Excellent.
Okay, thanks Alessio and Peter. We are seeing also that custodians are increasingly under pressure for risk and compliance aspects of their offering, in particular from institutional clients. How does policy management play for you into the enforcement of audited risk and compliance-based operations?
So you want me to take that one, Alessio?
Yeah.
Okay, yeah. I mean, yeah, sure. Fundamentally, sorry. So I say fundamentally, I believe that policies are the absolute critical success factor for any kind of custodian or service provider dealing with funds, right? It's more than just having a specific, let's say M of N quorum-based approval of transactions. Custom policies are really things that are orchestrated workflows that are built around the actual procedures and the participants and the custom rules that are in place for every single client, and every single client is different, right? You have to think about, for example, what is the policy around maintaining the administrative accounts for the service provider as well as all the user accounts, and making sure that they are secure and they are subject to multi-factor authentication and how you authenticate and authorize all of them. What is the authority to access and use private signing keys, and making sure that, even if you happen to have a relatively small number of connected individuals, that you can actually make sure they all do what they're supposed to do and not, for example, example, kind of hide their tracks or sort of remove user files or log files, or do things that would perhaps create the conditions by which they're able to commit some kind of a fraud, right? And then the next part about it is really making sure compliance functions and your audit arrangements are all sufficiently independent, and making sure that they are executed and operationally controlled as independent, right? So custom policy facilitates all of that. And then finally, I think, in terms of looking at controls around anti-money laundering and counter-financing terrorism, controlling the transparency and the traceability of those cryptocurrency transactions themselves, and really making sure that the due diligence that is supposed to be done on, let's say, users, as well as the application of, like, say, the travel rule for particular applications, for how assets are being recorded in core banking systems, and all of these kinds of things are all, have policy wrapped around them. And so you need the ability to create, custom-defined rule sets and secure those, and to make sure that when they are in fact being executed by various participants, there's no way to sort of change the rules. There's no some sort of administrator can go in and kind of like, all right, well, this time I'm going to do it this way. And so, having an ability to not only provide, let's say, workflow customized, but to secure it at the same time, where there's no chance for insiders to do any kind of manipulation. And that's the kind of thing when I think about, custom policy and being able to do that. And I think custodians and service providers that are able to demonstrate that capability, and that extends, by the way, to even the way that software is deployed in regulated environments. As you're going towards institutions that are regulated, you're going to need to be able to demonstrate to compliance officers and others that you have these kinds of policies and procedures in place, and they're hardened. So I guess I'll turn it over to Alessio.
Mm-hmm.
Yeah,
Thanks,
sure. Can you hear me now?
Yeah.
Yes.
I cannot anymore. Okay. Well, Peter, I agree with you. Actually, I think, in our conversation, this is one of the most important factors, and it's actually becoming the center of discussions with institutions, and especially with those that operate with licenses in certain regulated jurisdictions. Yeah? So, in summary, institutional client demands and requirements have significantly increased over the past few months. Yeah? To give you an example, with our first banking client last year that started using our platform, we had to build for them a completely new workflow to map their KYC AML processes, and to make sure that they could be implemented and enforced at the blockchain level. This requires a mapping of the high-level requirements and policies of banks into a different technology, and requires an effort in terms of developing tools that can be utilized by banks, and at the same time can be approved both by the internal and external regulatory requirements and scrutiny. Yeah. So, for example, for this bank, we had to split the KYC process into 3 parts. So the version of the proof of ownership. Now, the proof of ownership in the banking world is easier, but in the blockchain world, you have to provide certain types of digital cryptographic signatures, and you have to have a tool for that. The second part is the verification of the source of funds, and the third part is the analytic services to further investigate the source of funds. If we add this to the concept and definition of whitelist and blacklist, will have to comply with the new travel rules and the reporting requirements, and the fact, for example, there are several companies providing right now blockchain analytics services, that some clients might have different preferences on the service providers that they want to use, or their regulator might have different preferences in a specific jurisdiction for one specific provider. At the same time, the custodian has the role to give access to all of these services. Then the platform becomes very, very complicated, and and at the same time, it's important that we open this platform to the regulators, and that we make sure that every transaction and every action that has been performed by the compliance team within the company can be internally and externally audited. So this is a complete shift towards an institutionalization of workflow in the blockchain world. And as you said, the custodians play an important role at the infrastructural, at the lower layer of the service provision, and it's our role to enable institutional clients to adopt technology, providing the right tools to them.
Thanks, Alessio. And I know Xtrust is currently engaged and in talks with some of the largest banks and financial institutions around the world today. So how are you seeing the banking sector adopting digital assets at the moment, and what trends are you seeing?
Yeah, I mean, I don't speak specifically about companies that we are talking to, but what I would say is that there has been over the past few months there has been an increasing interest. Yeah, I would say that most first-tier, second-tier banks are looking at the space, and they have finally understood, especially with the recent regulatory updates in certain countries, and also with the launch of several projects on central bank digital currencies. They have understood that this market could actually become a huge market, and they want to be part of this market. So if we look at the types of institutions, and we can restrict it to banks that we're talking to, I would separate them into two categories. So you have those banks that are in the traditional financial world that are in the custody business, and you have those banks that are not in the custody business. So the interest from the first banks is to really understand how this digital asset custody can play a role within their business models, and how this can be integrated within their business operations. While on the other side, you have those banks that are not in the custody business, and they usually rely on global custodians or sub-custodians for specific markets. So in those for those banks, basically, they will probably rely third-party custodians or sub-custodians do in the traditional space, and the interest is more in doing diligence. Third-party custodians can comply with their internal requirements and regulatory requirements. Yeah. So at Xtrust, we have the luck to have a high level of flexibility in terms of deployment of our options, right? So for the first category, for custodian banks, for sub-custodians, we can provide enterprise solutions, managed services or on the cloud that can be deployed for them, so that clients can internalize their custody platforms and integrate with their core banking system and provide custody to their clients. On the other side of the spectrum, we can provide a full custody service, so that we can basically play the role of the third-party custodians for those banks that do not want to enter the space, that they want to rely on a reliable third-party custodians for this specific digital asset custody market. I hope this answers your question.
Yes, thank you, Alessio. And Peter, Casper, I don't know if you want to comment on this.
Go ahead, Casper.
Yeah, sure. I can add some comments, or maybe rather some observations just from what we see in the market from our perspective. So, we've been active in the market for about 3.5 years now, and myself and my co-founders have a background from long careers at Goldman Sachs and kind of in the financial services industry. And there's no doubt that when we first got into the space full time in early 2017, very, very few people were looking at this space from the traditional banking side, either investment banking or traditional commercial banking. And as time has passed, we've seen more and more of our former colleagues move into this space, both in terms of investing their own capital, but also just kind of resigning from their existing jobs and moving full-time into the space. But we've also seen a lot of the larger institutions who initially shrugged off any approaches and any discussions around the space to increasingly take it more and more seriously. And they are, many of them are dipping their toe in. They're starting with the large cap assets like Bitcoin, or they're looking at permission blockchains and how to tokenize maybe some of the more illiquid, inefficient markets like private debt, for example. But there's no doubt that there's a very, very strong trend of further institutionalization in this space. And part of it is driven by the banks themselves having their core business model under threat from many of the fintech companies like Robinhood, Square, Revolut. And now many of the crypto companies are also looking to, they're issuing Visa cards and they're applying for banking licenses. So they're under pressure. Likewise, many of their large clients who generate a significant amount of fees from them, for example, hedge funds, prop desks, trading desks, market makers, are also asking about digital assets. And obviously, as a financial institution, you want to offer as many products as you can to your clients to maximize the value of your client, and also make sure they don't go somewhere else and to another platform and gradually move more business there. So it's kind of both a push and a pull effect here. But overall, the trend is really clear. And what many of them now are going through is this kind of aspect of, should we build it in-house, or should we take some of the existing already very good solutions that are out there?
Thank you, Casper. And we are also seeing, in this period of time, a lot of consolidation in the market. How do you interpret this, and what does this mean for your business, Alessio, and in general for the landscape?
Yeah, there has been a lot of consolidation, obviously. There are different types of consolidation in this market. I think this is a natural process that we have seen in the past in the traditional financial world. This is a very specialized business area, and they have to operate with a stress in order to make a profit. So consolidation is really natural. In our market, consolidation has happened at different, I would say, different levels. On the level, you have larger custodians that have been acquiring smaller players, penetrate a specific area, or just to increase their market share, or acquiring player newer technology or better technology platforms. You've seen, especially recently, some vertical consolidation with players from different market segments acquiring custodians to integrate different services and provide an integrated service to their clients. I think looking forward, obviously, this process will continue until we will have a smaller number of players. But what I think we will see in the coming months is that we will also see consolidation cross markets. So basically, we will see those firms that we have just mentioned and that they operate in the traditional financial world, starting looking and acquiring players in the digital asset ecosystem, as we see an increasing interest for central bank digital currency, as we see regulation developing in the main financial markets jurisdictions. So, in summary, interesting times ahead for us because now I would say everybody knows that there's a huge market to be captured, and only a few players will be able to survive and capture a big size of this market share.
Yeah, Peter, Casper, what's your view on this one?
Well, I kind of think, first of all, from a trend perspective and the consolidation, we see continual cryptocurrencies as speculative investment assets, and that's driving a lot, mostly on the retail side. And I think we're going to continue to see that on the retail side just continue to go up. And on the institutional side, I think there's still somewhat early days. I think that you have some players that have, if you will, bought in and they've created crypto funds, and in some cases are doing quite well with that, and some lending products and things of that nature. And of course, we have the whole decentralized finance that is, starting to take hold, very smallly, mind you. But these are still very, very early things, and I think that people are just trying to figure out what's the right business model, that we want to move in. You have the large, mega banks like, JP Morgan, Bank of New York Mellon, State Street, Citibank, et cetera, that are, the traditional custodians, and they're examining, this market, looking at it from the perspective of digital assets. You have, in the U.S., you have the state of Wyoming that is doing the SPDI legislation and framework around becoming essentially a bank. Well, we can't lend, but nevertheless a bank. So you have exchanges now that are looking to become or offer banking-like services without the lending. And then you have fully regulated financial institutions that are dedicated towards digital assets, but also completely have traditional financial rails and be able to provide regular products as well. So you sort of see, I think, this sort of like sort of tiptoe approach to moving into taking traditional finance and essentially opening up a new area for digital assets, and we'll see that I think we'll see that to continue, quite frankly. So I think that a couple of interesting things will help with that. We have a very big interest in central bank digital currency, as Alessio was talking about, and I think that's just going to continue. All the major central banks are doing something in this space, and I think that in China, the digital yuan is going to be a bit of a game changer. I mean, most people may not agree with that, but I think it will be in terms of being able to normalize digital assets, if you will, for common day purchases and things of that nature, all based on essentially a stablecoin approach. And of course, Libra version 2, I think, is also fairly robust, and it's well thought out. It's going to be compliant to regulations in each of the countries in which it is offered. So these are all indicators, and of course, the U.S. is talking about the digital dollar. And DTCC has got projects with respect to leveraging digital assets for optimized settlement and clearing. So these are all indicators, in my mind, that this market is only at the beginning, right? And we'll see where it all heads, but it's good to have robust technology, making sure that whatever solutions are ultimately adopted, you can bet that the need for enterprise class technology is going to be one of the things that's needed when you sort of move out of the retail space. And I think IBM with our partner Hex Trust, we're well suited to deliver on the promise of enterprise class institutional custody, as well as technology to facilitate all kinds of different digital asset business models, whether they are trading or lending, staking, OTC desks, payments, policy-based, and DeFi for that matter. So all of these things, I think, are on the table, and it's a pretty exciting time to be involved here. And I think that the future is definitely bright, and we're just at the beginning.
Thanks, Peter.
Great. Thank you all.